Hello and welcome, guys. It is the midweek update for the 10th of May. Just had a CPI number come out. Probably going to be the topic for today and where to go from here. Real quick, guys, make sure you follow your own trading plan. Take responsibility for the outcome, especially when we share trades here. You know the deal. Let's jump straight into it. Good to see everybody out. So the market's pushed back to some basing levels with a strong, I'm going to say, unexpected move on Friday. And we just kind of have stalled out. Darren and Rob made a pretty good mention of this on the weekend update. As we expected, when I say that ADP employment number up as high as it was way high. I expect these markets to roll over and fall apart. They just seem to be past the inflationary fears and worries. Now, jumping to the bottom here, the CPI absolutely confirmed that today, as it was under 5% year over year for the first time in a long, long time. So it's showing signs of contraction. Now, the next big thing is going to be, okay, cool, told you so. The markets were right. The Fed saw it as well. They're still on tap to maybe raise interest rates again or not, or did they do it too much? And then we got to look for this quote-unquote soft landing. I'll talk about it again at the end of this at the end of the class. But we're just kind of left with, okay, well, ignored that last piece of employment number. The markets were ahead of it, and we're up in this bullish area. Now, we've got earnings season coming out. We've got a lot of pessimism out there when it comes to some of the companies that I followed, but they weren't all met with selling. So sentiment-wise, I didn't change anything from last week. The markets are bullish. We're technically kind of a +1 area, at least week to week. I think we're a little stronger than that when it comes to the month-to-month. But earnings are cautious. And companies are coming out, beating estimates, staying in line with next quarter's projections. Those companies they seem to be moving higher. Rivian's a great example of that. Missing numbers badly, but in line with their projections moving forward. So these are already reduced numbers that they're missing or coming in line with. So once you lower that bar so low, you jump over it, it's celebrated. This is going to be a good gauge of the sentiment of the investor. So we'll see where that takes us. Now, overall, guys, it's just a situation to where technically we're where we're at after a pretty good push on last week, and we haven't really done much even today. I'm expecting a little bit of a follow-through because this number was very strong. It's exactly what I'd say the markets were really looking for to prove themselves right, and they've gotten it. So we'll see where we finish or how we run or close into the day. Maybe we make a surge to the upside or pull back. I did see a pullback yesterday into this number. So I saw a little bit of reluctancy, and I did the end of day yesterday, and today's just kind of right back to where we were. Kind of a bummer. We're not really gaining or losing any sort of ground. All right, so there's the recap. Let's get into the fun stuff. First off, here's our trade ideas from last week. I carried some over from 2 weeks ago, my own personal lists and lists from around the board here. We've got TAP and CRM both on the bull side. I like Netflix and Disney and even Costco. I think we had Costco sideways to up, and it held in there. So some good sideways trade, folks, because we're not seeing a lot of follow-through with much. And we could be in for this really painful push-pull, kind of sideways churning around market, especially as we get through and finish with earnings. I like to focus on things that have already announced that were either good or bad. They've played themselves out, meaning the volatility's calmed down for the most part, and then I could try to play it in some sort of a direction. I'm losing a lot of directional confidence because I'm seeing a lot of these things that I expect to go up come down, and a lot of things I expect to continue down have a pretty good surge back up to the upside. I've been picking on mostly some of your at-home names, some of the stuff that if you could rattle off the top 10, 15 stocks just in your head right now of what you've been seeing in the news and what you've been trading, that's kind of where I've been focusing. Unfortunately, they're the most volatile, and they don't make the most sense. For instance, if something comes down or if something's falling apart and their numbers are horrible, but then it's got like a 4 or 5 day surge straight up, it's like, geez, that doesn't make any sense. That's the stuff to avoid. Unfortunately, it's the stuff that moves the most. So I'm trying to get back to these areas of Disney's and Netflix and Costco, this neutral. They're huge, they're large, they're volatile because they're big numbers, but there's nothing hidden about them. They are what they are. They're being dealt with the way they are, and as long as they stay within a range, we can make some money off of it. I want to echo what Rob said last week, guys, because the straight call, straight put has been a super difficult way to trade unless you are just dialed in with targets. Meaning, hey, I'm going to get into this thing. If it gets to my target, I got to take it, whether that's in an hour or in a day or 2 days or a week. You've got to be on top of it. If you're not, you can miss out quite a bit. All right, so on the bull side, you can see we got a whole lot. Now, there's a few trades on the bottom here. Prudential, TFC, Truist Financial Company, and USB. They're almost identical patterns, and we can take a look at them. I don't have the example up. I got SQ, 3M I loved, and then LNG for those. Let's go ahead and just take a look at these and break them down one at a time. This is Molson Coors from last week, and it's holding in there really, really well. So hopefully, whoever got into this is still into it, and this was still continuing to pull back. I think we discussed somewhere all the way to this area, but it didn't. It just hesitated. It was kind of high basing, and it hasn't been since the last couple of days that it's actually showing a sign of a pivot point at support around 64. So I like it. Diagonal guys, you're doing pretty good in this. Butterflies, that's great. Straight calls, once again, super difficult. Rob said that, hey, you're basically just giving away all the theta if you buy calls and puts, and this is one of those painful examples. If you were +1 on this, you're doing okay. If you're a +1 with a straight call, it hurts, right? So let's make sure that we do something. Targeted butterflies, broken wing butterflies, diagonal spreads, some sort of hedge. I'm okay with vertical spreads. I just do not like the timing with them. Me personally, my trading with vertical spreads as of late is not good. I just can't gauge the timing. So something multi-legged would work. Multi-expiration is what I'm kind of leaning towards. But it's a great chart. It looks good. So hopefully you guys were in from this last week and you're still in it. Let's get to CRM. I like this as a high base breakout. And what do I do with high base breakouts, folks? For you who've been watching this class for the last 8 years, I think I've been doing this. Just class specifically, 6 years, 8 years. Anyways, when you get a breakout, the first thing you get is a hesitation or a little bit of corrective action. These breakout moves can trigger selling, which could be just as simple as profit taking or something a little substantial, meaning let's roll off some of my position and carry the longer position moving forward. And this is just straight stock. Some of my day trading days, that's what I've got some experience at. So I expect this thing to pull back or consolidate right where it's at, 200, 204, 205. Right around that area, so something sideways to up would really work. But I do like the fact that it did break higher, and it is showing a little bit of outperformance. Let's get on to Netflix. This is our first sideways trade. This had a huge range for my Condor traders, and I still like it. I still like the 350. You could cut it a little bit shorter. I know going to 290 is just massive. I have a lot of traders that want to tighten this down to maybe the 320 mark. You're definitely going to be favoring the upside here. I'm fine with it. It's kind of found this beautiful homeostasis here at about 335, right? So 350, 320, 335, right in the middle, $15 up and down. But butterfly-wise, or you could go the outside, 350, 360, 320, 310. You're not going to get very good risk-reward, but at least you're going to give it a wide berth. I would have to lean towards glass half full here, guys. I'm going to show you my hand here in a little bit, but with the way that the markets are moving and what's going on sentiment-wise, if you're going to make a mistake, it would be sideways to up. Remember, Netflix did come out. They did say they don't expect to grow as much as they did. They're trying to crack down on pirated user passwords. We've heard that before. And it has a lot of competition out there, but it's still holding pretty solid based on all of that. So I like that sideways. Pick a range. The tighter, the better, right? The tighter, the better you're going to get from it, but also the riskier it can be. This is Disney. It's had its push-pull. Good consolidation here. A lot of volatility when it comes to what they expected to do moving forward, expecting a slowdown in tourism, expecting all of that. Not very good with Disney Plus, but they're still optimistic on their parks. Popped out, look at this, popped out of the upper channel, and it looks like it's moving back down. So I still think that that's feasible, this 92.5, 102.5 range. I guess that's kind of where I drew those lines. You could take that wider. You could take it tighter. You could do maybe 95, 100, 105 butterfly. Remember, folks, with the butterfly risk graph, you can still make money anywhere between, here and here. So it doesn't have to hit 100. It could be up or down from that. So when I'm $5 out, I probably have a pretty good variance above and below 100 to where it's going to make me some money. What's cool about the butterfly spread as well is if you have a targeted area, a targeted butterfly, or in this case, you've just got, let's say you get 2 or 3 or 4 contracts, take some off the first few days, take some off the first week, things of that nature, so you can scale these in and out. I'm really just trying to push you guys to do something leveraged. Straight calls and puts are awesome. You can make a ton, but boy, if you're wrong, they hurt. Costco, this was sideways to up last week, and I still like it sideways to up. In fact, today's candle's super great to see it right at $500. This is an expensive stock, but it does have that 510, 490 range. That's pretty sweet. Let me see if I can draw these lines here. 510, 490, 500, right in the middle. $10 range. You want to play it slightly up. Yeah, here's why. I'm seeing ascension here. So I'm thinking that if I'm going to err to one direction, it might be the upside. For sure, it might pull back to the 490 before it does that. That's what's so beautiful about having theta on our side. Let's move over to the bears. SQ. I think we looked at this last week. It might have been on last week's. I know we've kicked this thing around for a little while. It's still in that same beautiful descending. Look at this descending. Wow. I mean, it just took exactly what it did here. Gap down, retraced, and it looks like it might even try to build it again. So it's on the upper part of this range, but it's slowly bleeding. Let me get rid of my chicken scratches and draw some new lines, because now we're up against a pretty major support level that it's toying with. Could it break, fall, and hit this 55 and come back? Sure. This is why I didn't zoom in as much as I did the previous charts, is because I wanted to get back here in November where you could see that it did actually visit that 55, 54 area. Now, this isn't something that I would do straight put with expecting it to break, but boy, you could bleed this thing down quite a bit with like a 60, 55 diagonal spread. 55 might not bring you in that much money if they have different strike prices. And once again, folks, I can't memorize every single strike price available. I'd have to check this. Dollar strikes makes it easier. 250s makes it easier. We'll just see, but I do like the pattern. 3M, this one actually came from this class in a while, and it was interesting because I watched Corey's end of day a little while ago, and he had Mosaic, which I don't know if you guys have seen, just kind of collapsed. So I immediately went back to some of the things that I kind of associate it with. One's basic materials, this one's more industrials, but they kind of move the same. Gigantic, big, huge company, makes all sorts of fun products. But I love how it's just pinned at that 100. This is great for you guys that love that diagonal spread, waiting for it to break down. And if it doesn't, you're just going to sell again and sell again and sell again. I'm okay to be aggressive with this. I'm okay if you guys wanted to sell the 100. Yeah, it's kind of in the money. We're at it. And if it breaks down to 99, 98, so on and so forth, you're going to have to work your way back out of that. But the premium is probably super, super sweet. So 102.5, 105 longer term on the put side, and then go ahead and sell at the money. See if there is something in the 90s that is feasible, but I do like it. Even if it doesn't want to break, it'll kind of churn around. Okay, and then the last one I had for our example was, I think, LNG. And this is just your classic bear rally. Nice and clean. Hasn't really done much. Hasn't confirmed, that's for sure. But I just like how this is kind of sloping lower. I like how it has bounced off of some support that it started with in January of this year. And it looks like it might just fail. We had the crossover a little while ago. The moving averages are starting to flatten and turn. Nice little confirmation right around that level. I'd be confident not only targeting this thing around 144, but further back down to 140. And it's just because of this slope here and energy. If we are indeed in for an economic slowdown, sure, the CPI inflation's showing signs of retracing. But then again, so will the demand, so will the consumer. And when that happens, demand for energy goes down. And we've seen, in this specifically with oil and gas, oil prices coming down a lot. So this might hurt its bottom line. All right, there it is. That's what I've got with your trades. These are your trades. Great work, folks. Let's get into the market analysis for today. And this snapshot was painful to take because it took me a while to put things together. I had to double, triple check the numbers. But take a look at what we've done since Monday. The diamonds, 0.47% to the downside. Look at the SPY. Nothing. Absolutely flat going in today's announcement. I don't expect these to stay here much longer. It'll be interesting to see once this number's digested and what traders want to do with it. The Q's down 0.51%, down 0.5% for this is from Monday, Tuesday, and Wednesday. That's not a substantial move considering how much that can move. And the Russell, absolutely flat. Oil continuing to slip, and gold had a little bit of a bounce. I think that had a lot to do with Friday's move. We expected that dollar to collapse, and it didn't. Really interesting, right? So we'll see how that plays out. Let's get to the overall motion of the ocean. Now, this is what's going to be difficult as we get into summer. You guys have been with us around the block at least 1 or 2 years. You know that we do summer trading classes all the time because it gets into this doldrum area of just range bound and boring, and it can be a little bit more volatile because the volume is less. And we are already starting out a pretty significant range here, at least on the SPY, to where I can see that already happening. And yeah, folks, it's not even the end of May yet. Right? Summer usually doesn't start till June, July, August, stuff like that. Well, not that late, but until after May, first week of June, things of that nature. But we're already kind of here. This last little tug of war is the anticipation, I believe, of that last fear when it comes to inflation. And that's pretty much gone. This move on Friday, and Darren, if you guys saw the weekly class, I agree with Darren. It was perplexing. I saw that ADP employment number come out, and I said, oh, we're going to get smashed. Because we're worried about a consumer that's super active, and all of a sudden we see all these new jobs added. It's like, uh-oh, consumer's going to get more active. The market's just completely turned that upside down on its head. And it put us right back into this range. So I'm going to stick with it and play it. I'm cool with something sideways. I'm going to let the earnings go through. Whatever's good, whatever's bad, whatever's consolidating. I'm just going to go ahead and just play whatever the sector's doing and whatever traders are doing with it. I'm not going to try to anticipate. I'm not going to try to guess. It's a good way just to lose a lot of money. All right, so there is the SPY breakdown. The diamonds, on the other hand, looks a little bit more ominous, but it's still above that 50-day moving average. This, to me, looks a little bit more breakdown here, but it just seems like it might want to hold this area here. Now, it can retest that 330 mark and move back up. It'd be just more of like a flag pattern, more so than the S&P, which is a true consolidation, and you're going to see here in a minute the Qs, which is an ascending triangle pattern. It's just kind of where it falls. I'm not going to look anything too deep past that. Until I see any of these overall indexes break down or break out, I can't really be too reactionary past +1, -1, or sideways overall. Actually, you know what? Let me do one more thing because I forgot. I wanted to make mention of this because Corey identified a real great cup and handle pattern going on in this right now. This was its last chance, and it's back up, but it still hasn't exceeded. What we're looking for is a blow-off or breakout of that cup and handle. Now, that can be longer term. If that breaks up and stays there, you can actually turn this trend around, and all of a sudden we found ourselves this SPY that's been in this overall bearish trend for the last little bit, like about a year or so. It is now going to turn. So it's going to be pretty substantial. It can also give you a very violent head fake. So this is right where you can get what's referred to as your blow off top. Everybody in the world sees this cup and handle. Everybody in the world sees this crossover and knows it's going to break. And then all of a sudden it doesn't. And we get a slowing economy, a slower investor, and we get into more bearishness. So I just wanted to keep an eye on that as well, which is great. That's why we meet every week. So let's move to the Qs. This is the strongest of the bunch. Absolutely. Still think it is. Look at this ascending triangle pattern. It's super strong. In fact, this chart is actually, the Qs itself is setting up for a wonderful diagonal call spread for those of you who want to put on something a +1 in the tech sector. This is the sector that I've seen a lot of companies warn and just go higher. So let's see, was it AMD? AMD was one that I watched, and it missed, and it warned, and it was worried, and the stock's just gone up. Now, it's not the greatest trend, it's not the greatest chart, but I'm just seeing a lot of optimism in the tech sector overall. I've also seen a lot come in line and project that they're going to make their numbers or be okay moving into next quarter. So this is definitely an outperforming sector, and it's pretty strong. All right, let's get rid of these. Okay, let's get the economic reports. That was an old VIX chart, by the way. So where are we going to sit? Well, this is the really cool announcement. Look at that, 4.9% expected year over year. That's pretty decent. This is month to month, not excluding food and gas, which you guys know my stance on that. I always giggle because what do we pay for? Food and gas. What's the most volatile? Food and gas. But if you include it, we have a 0.4% increase from a 0.1. It's the year over year that we're looking at. It's the slow trend. It's the slow play that these markets are worried about. And that's good. That's the first time I've actually seen that go south in quite a while. So that's out of the way. What's left? Well, there's all sorts of fun stuff. We've got the debt ceiling we can talk about. We've got what else is coming up? Ooh, is there going to be a soft landing or a hard landing? There's always something to be afraid of. But that was a big number, I think, and so far really hasn't had too much reaction. We're going to go to the live markets here, but we'll see where that goes over the next few days. What do we got left here? Unemployment claims. This is a number I want to see, unfortunately, go north. Expectations are for 245K versus 242K, so expected to increase. It shows slowing, contraction. I'm trying to see if there's anything else in here that I really care about. Not much. The PPI should be pretty close to where we saw from the CPI, so I expect in line or a little lower. But I don't think that's going to be as widely watched, especially now that we have that CPI coming a little weaker. All right, so let me pull the class. What are you guys thinking when it comes to your market direction? Let's start with the week. Go ahead and launch this. And let me know what you're thinking. We've been pretty bullish, and the reason being is because we have to chart. We just chart. So, all right, folks, let's close and share this poll. We are definitely at a 0. So for the week, we're at a 0, maybe at 18% there. What, +1, +2? Somebody had +2 up there without even registering as a percentage. So somebody went pretty wide, and a -2. We've got outliers in there, but the majority of you guys are thinking we're not going to really do much. Excellent. Appreciate that. Let's go ahead and do another poll. And this is going to be for the month. That's good. We stalled out. Let's close and share. A little bit more opinionated when it comes to up and down. 50% up, 20% down, 40% flat. So over the month, we're expecting a little bit of a move to the upside. Yeah, I can say that. A little bit move to the upside, where in the week we don't expect much. Excellent. Thanks, guys. Let's go ahead and hide that. And I'm going to go ahead and share. Now, I do see something that I need to correct. So yesterday I had a +1 on the monthly outlook. I meant to move it to a +2, but I had a 0 on the weekly outlook. And what it was because of the slope of the lines of the 20 and the 50, and it's going to consolidate. Now, I did bump this up from a 0 to a +1 from yesterday to today. Once again, folks, this was, I believe, if you watch my video, it was here. It was meant to be here. So overall, I'm still definitely glass half full on the longer term, but in the shorter term, that's why I'm focused so much more on those sideways trades that we discussed. And I'm going to continue to look for sideways trades. It'd be nice to find sideways trades that have already announced. And just to let you guys know where I'm leaning towards, obviously right here, is I want to see that something announced that did pretty good, projected decent, not really panicky, not worried, something that's not kind of a flight in the plan. So yes, I'm looking for those Amazons, Costco's, Netflix, things of that nature, bigger companies that are kind of boring. I'm going to stay away from the ARK stocks, the Kathy Wood stuff, Shopify. You want to take a look at a chart, folks, take a look at Shopify. The thing is just falling apart, and in the last few days, just straight to the moon. I can't play those stocks. You're just going to get hurt. So that's where I'm leaning towards. All right, let's get to a sector analysis. I've already spent way too much time blabbling on this class. Let's get to some trades. So, weekly performance, all tech, real estate, energy. I think the technology is kind of leading the way. It usually does through earnings. It usually is something to where it shows growth and expansion when you have an optimistic investor, and we definitely have that. Real estate, I think it might be just a reaction based on, it might not, the economy might not be slowing down as much as we thought. My verdict's still out on that, folks. I don't think that we've had an aggressive enough correction in home prices. That's my 2 cents. We'll see where that goes, especially when banks tighten up lending. Energy, that's just super volatile. And then down at the bottom, healthcare, consumer defensive, seeing a lot of stuff move out of those. And basic materials, you saw the 3M, which is a consumer defensive stock, right? It's one of your larger conglomerates. And then basic materials like Mosaic and those things, they're just starting to really get hurt. The strongest in the week is so far, oh, I guess I could have zoomed into that. Sorry, folks. Let's get into tech. Tech's got the exact same chart as the Qs. Here's a great alternative for a diagonal call spread if you can't afford the Qs. XLK is a great one. I would look deeper into that, but we saw the exact same chart. This is XLV, healthcare, kind of the bearish flag pattern or a flag pattern. I don't want to say bearish because it's still above its 50-day moving average. But if you Bollinger Band guys out there, I mean, this might still be able to come down to this area, consolidate and move higher. But it is going to be kind of sideways to maybe slightly bearish. I'd be like a negative 0.5 on this, but I wouldn't take it past its support at that 50-day moving average, especially if the overall markets are about to gain some confidence and strength and move higher. Let's get a conclusion, and then we're going to go ahead and look at some of your trades. Keep typing them in, folks, if you have some. So, should, right? I love this class. I get to throw out an opinion. Unfortunately, you guys have to listen to it. Inflation fears should start subsiding. And what I mean by that is we're starting to see the markets being correct. We saw it in a few numbers a while back. The first CPI in line. The Fed, instead of a 50 basis point, only did 25 basis points, talking about maybe May's the last. So we're starting to see inflation subside. The CPI number's big. It's big. It's showing contraction. So it leaves the markets to deal with valuation in companies moving forward. Now you're stuck with, what do I want to buy? Okay, if there's no more fear about this, that, and the other, what do I want to buy? You also got to start worrying. I'm going to skip to the bottom here. You got to worry about a soft landing. And I think that's where the markets are going to focus. Did the Fed do too much, too aggressively? Did they just throw that ball down the hill and we can't stop it? Unemployment doubles. Spending completely stops. Housing falls. Yes, there's always that. So the focus in the watch will be on a soft landing. Based on the jobs numbers and employment not yet contracting, we are set up for what could be a pretty decent soft landing. That's my 2 cents. Debt ceiling talks. We got all sorts of fun stuff if you guys like to play the political nightmare, or I call it the Bachelor. Bullish technically, sentiment, we're still consolidating. We're in this range, and it could stay volatile going into the beginning of the summer. If so, let's start off sideways. If it breaks out, we can always adjust up, right? Or if it falls apart, we can always adjust down. Some earnings projections have been cautious. I might as well read my last bullet here, but not all stocks have moved lower due to these projections. Be mindful of that. Hey, we suck. It fell apart. We're expected to do worse moving forward. If all of a sudden you see this thing start to rally, that means there's still people interested in buying it. And it's going to be some of those stay-at-home darlings. So keep that in mind. All right, that is it. Let's go out and take a look at some trades here. See if I can, yes, there we go. So since I've been talking, these markets have headed a little south. I don't know if I scared them personally, or I talked them up way too much, right? Nah, just kidding. We're really just not going anywhere. All right, let's get started here. Who's first? Oh, let me move this. Can't get to my cursor if I can't see it. Moderna. This is one I haven't seen in a while. This one used to be one that we looked at all the time. Brett's looking at a 135, 125 bear put spread. Okay, expiration of the 19th. Let me check our date here. It's the 10th. A week and a half. That's right. 19th is the third Friday. We do have 4 Fridays this month. And Moderna, let me zoom in on this bad boy. I like it. I do. Okay. Let's draw the lines for everybody. What do we got here? 35, 125. And it's a good range. I like it. It's a good range. 25. It's kind of funny because you got a $10 range there and it doesn't look like much. I think could hit it probably in a week and a half. I like it. I think it's cool. Now for you guys that don't want to lock yourself into something too finite with as far as a vertical spread, you can diagonalize this, right? Or you could wait for this thing to get lower to the 130 and then go ahead and sell that 125 as a diagonal. Now I'll just answer it for Brett as well. This is expensive. It's a $100 stock. So when you do the vertical spread, it's going to be much, much more leveraged. But unfortunately, part of that leverage is you have to wait for your expiration cycle. What I'd love this thing to do is go to 120 by Friday, and he doesn't have to worry about anything. So excellent. Thanks, Brett. Let me write it down. It's in the right sector, right? It's looking good. Okay, let me go to our next here. Justin, this is General Mills. May 19th, so a week and a half, June 16th. Ooh, diagonal, 85.90 call. Diagonal, look at this thing, just climbing and climbing and climbing. Seen a lot of these guys do that. Like it. I like this a lot. I like the selection of strike prices. I like the expiration dates. Great. Go ahead and draw some lines. 85.90. Look at that. Yep. 85. Deep in the money. Playing at the money. I like it. I love it. I love it. I mean, look at this move that it had right through there. And that played, what is that, 87, 88, and just finished at the open about 88. So it doesn't look like it. Here's another grouping. It doesn't look like it can do that, but it does it more often than not. Take a look at this one. So I love selling at the money strike price. Let's go ahead and do this one more time. You know, at the money, it's like right here. It's like, well, geez, Joe, what if you're wrong? Well, look at this. It slopes downward. It's not like your gains drop completely off. So it's nice to play. And what happens if this does this and then pops right back up? Right? Or it continues higher and then pulls back. So I love it. I do love the diagonals. It's one of my favorites. It's a lot more, it's one of the most flexible trades if you have the patience to sit through it. And just trust that it's working. Awesome, Justin. Thank you. Let me write it down here. GIS. Okay. PM. We've got the 19th of 95.92 bear put spread. Oh, let me zoom in first. Thanks, John. Yep. Philip Morris, one of these defensive stocks. The defensive sector is one of the weakest, right above industrials, right? Let's draw some lines for everybody. 95.92. Right there, right there. Good target right here, somewhere there. You could go down as low as 90 if you wanted to open up. I like the 94.92 or the 95.92. Gives you a little bit more leverage. Excellent. Okay, moving along. Intel. Yeah, you know what? Thanks for bringing this up, Joe. I was looking at this because I was telling you all about what I saw in AMD and what it did, and so I'm wondering if Intel was doing this in sympathy. Whoops, crap. Let me go ahead. And I was trying to get to what is interesting about Intel is this move here. So gaps up, didn't like it, came back, and now it's set a lower pivot, and it's rolling below that 50. Right? It's like, what? And we've seen this do all sorts of, here's a gap, then it gaps down, then it goes up, falls apart. So is this just one of those gaps up and falls apart? Yes, I'm looking at Intel pretty intently as a bearish trade. I don't know if I want to play it something sideways to here with a target of 29 or just be patient and wait for it to break the 29 and then play it as it goes further down. And you're absolutely right. I'm looking at these moves. I mean, look at this thing. That's kind of where I'm leaning towards, but I do like it. And thanks for bringing it up, Joe. Gave me an opportunity to talk about it. It is on my watch list. And he's doing a butterfly on that. Excellent. This thing revisits. It bounces back all the time. So if he's got a butterfly, even at 30, and this goes to 28, chances are it could get back there. Maybe you got a targeted butterfly at 28. Take the profits at that point. 32, 28, 30 butterfly spread, right where it's at. There's so many different ways to play this. All right, man. Thanks. Felix, BXP. Boston properties. I'm very curious to see what happens through the summer. I understand that summer's supposed to be the peak of home buying, but just based on the home prices out there and what we just went through, I don't know if we've got a consumer that's going to be tired or not. But he did find something super sideways. Target of 50, maybe a good horizontal put. Absolutely. Calendar spread or horizontal spread, same thing. Right at 50. Absolutely. Let me stretch this out a little bit and see if we can't get. Oh, geez, that's so tight. 53 and 47 is what he's looking at, range between. I like it. Let me see where we can just draw these lines here. There's 53, and you said 47? Probably down here at this area, right? Okay. Okay. I ain't mad at that. You can go all the way to 54 if you wanted to. Butterfly spread on this would be great. Okay. I love it. Let me put it down as sideways. Thanks, Felix. All right. Let's do, what do you got? Microsoft? Gone gangbusters. I know it has. This thing just took off. A couple of these have. I thought Apple would be up here too as well. I truly believe a lot of this is the innovation or the talks of AI. That AI has just really kicked butt, and it's the larger companies that are being favored. Usually, it's the startups like AI itself. Actually, that was on my watch list for a while. Let's take a look at it real for fun. I've got some time with you guys. So this is ChatGPT, the one that's been used all the time, and you can see, yeah, we go from $10 to $34, and now it's all over the place. Usually these are, they're going to be bought out by Apple or Intel or AMD or Microsoft, and some of them just fizzle out. But I've noticed the bigger push I'll just go back to it, the larger software companies. Right, we'll have to watch that. Waiting here for a breakout to hop in. I agree. Sure, Justin. Probably going to with a targeted butterfly on it. Okay, absolutely. It's a big mover and it is expensive. So I don't think I've traded Microsoft with a straight color put since the 90s. So, I don't know, man. It's pretty bad. So vertical spreads, targeted butterflies, excellent. I'll put it on the bull watch. MSFT and sideways. I'm totally fine with consolidation. I'll put a little sideways arrow on it too. Sideways for the shorter term, but it's pretty good. Let's go back to WWE. All right, this was on our watch list last week. Did I have it on this week? I might have left it off. Oh, I did. It's consolidating and pulling back. It's not bad. It's not bad. This was on our bull watch. So sideways to up still looks good on this. Cameron, you have the 105, 110, 115. Yeah, and he says it just fell below its 20, but it's not a bad trade. It's still holding on. And if this was from last week, I still like it. I do. 115, 110, 105, right? So it's just on the lower part of its range. This could easily play this choppy game, and you're right back in business. You know what? I'm going to put it back on the sideways list. I do. I don't mind it. It's been doing pretty good. I truly believe it's just taken a break because of the surge that it had after those numbers, right? Or whatever that announcement was. World Wrestling Entertainment. So it must be McMahon did something, didn't he? Right? Re-signed Punk. What's his name? CF Punk. Anyways, for you guys who watch wrestling, you know what I'm talking about. All right, let's get to W here. Oops. Wayfair. Sideways butterfly. Zoom in on this. Oh, look at that. This is the stuff that I'm talking about. Do I play this bearish? Yeah, until then. Do I play it bullish? Yeah, until then. But guess where it stopped? Down, up. It's exactly where it started. And he's looking at a 35 landing zone. 40, 35, 30. Let me go ahead and erase this, stretch it out, and draw some lines. It's difficult to sit through these. I'm just going to warn you guys. Trust your chart. Trust your trades. Don't buy into these moves up or down. Just calm down, relax, and believe, hey, until I see price action confirm and sustain, I'm not going to change anything. Let's see. 35, he's right at it. And I like it. I like it. And he's going to use the upper, and lower right there. Perfect. Perfect. I guarantee you it's going to do this again before it goes either up or maybe all the way down, but I guarantee you it's going to try to it'll get wider. What you want to see is get quiet and tight. Let's look at a couple of factors that we can eliminate since I'm here. And I haven't done this on all of them, folks, but this is where you got to look. If you want to take a look at Finviz, looks like it's the 4th before market open, and that's exactly what caused this. Now, the markets didn't really care too much about that news because it's being sold off into. This is what I'm talking about. The earnings has passed. Whether they had good news, bad news, or anything sideways, the true move is what the markets do with it. And right now, they're selling it. So I'm going to stay sideways to maybe glass half empty. I'll put it down sideways though. I like the chart. All right. That's it for the trades here. All right, let's see if I can read a question. Oh, Mike, what's up? I've got double dino calendars. Get. If anybody had any opinion whether it's better to sell the whole trade back to the market at the end of the short trade, or better to put them on more short positions the following Monday, assuming that the trade is staying range bound. Mike, it's going to be 100%. And I guess the question, folks, is how do you manage a diagonal? It looks like double diagonal, so you're only going to have to worry about one side or the other. So if you run into a situation like that, what I have found is if it is at your expiration cycle and it has exceeded what you expected out of it, let me go ahead and just let you guys look at something else while I type these out. And what I mean by that is if it hits a target zone that you expected it to hit at that date, then you want to close the whole position because the position is finished. If you're trying to make the decision whether or not to add or continue a position, then you're adapting to what the position has done. That is not a good thing to do. We need to build a plan and trade the plan. I would rather have you close the whole position. This is my personal opinion. Close the whole position and redo another one. What does that cost you? Nothing. But what it does is it forces you to get out of a position that's working for you, reevaluate the whole stock and chart, and refine new strike prices, different strike expiration cycles. It gives you a better chance than just reacting and try to maintenance something because it feels right or it's acting a certain way. We never want our trades to dictate how we manage them. That's the key to consistency. Do what you say you're going to do, and if you see opportunity moving forward, start it as a brand new trade. It's a great question, Mike. I get it all the time. And like I say, there's nothing wrong with taking it off and putting it right back on. Seriously, if that's what it is, great. Because you took it off, you put it back on, which means you had to look at it. You had to look at it objectively. Let's see, 1, 2, 3, mid, 1, 2, 3, down. Okay, here are our trades. Thank you for that question. It's an awesome one, and it's an important one. So for sure. All right, here is our trade list. Now, Microsoft, I said, yeah, we could do a little sideways if you guys wanted to on that one, and I don't think I've got anything up or down from there. WWE, neutral, but if you want to go slightly bullish on that, that's fine. But these are great trades, guys, as always. This class rocks. Okay, I'm going to catch you guys loose. Thank you so much. You know how to get a hold of me if you need any more questions answered. But until then, we'll talk to you next time. Bye, guys.